The S&P 500 posts its worst day in over a month, while the Nasdaq snaps a 7-day winning streak as disappointing macro data reignites recession fears. Stocks in the Asia-Pacific opened lower, while the SGX Nifty 2 signals a weak start for the Indian market. Crude prices fall by about 1% as a higher-than-expected build-up in U.S. inventories worsens demand concerns. Germany, meanwhile, says it is no longer dependent on Russia for its energy needs. IndusInd Bank's numbers beat estimates in the third quarter. Net interest margin comes in at a 10-quarter high, while asset quality hits an 8-quarter high. Asian Paints expected to report double-digit revenue growth on a high base along with an improvement in margins. HUL too is expected to report an improvement in margins with volume growth of 4 to 5%. India is aiming for 6 to 8% growth rate over the next decade, say top union ministers at Davos. TCS's Rajesh Gopinathan remains optimistic as China reopens, while also saying artificial intelligence will affect our lives much sooner than previously thought. Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines this Thursday morning. We'll discuss them in greater detail. But first up, a lot happening in the global markets. So let's take a look at what the Asian markets are doing. The Taiwanese markets, they are shut for a holiday today, and taking cues from the global markets, that is the US markets, there has been a massive fall, and that is something which is reflecting in the Asian markets as well. The Hang Seng is down 170 points as we speak. Nikkei is down almost 250 points. So it's a sea of red across the Asian markets. The macro data is something which is reigniting recession fears, and that is something that we are seeing in the market moves as well. We have Hang Seng, which is sitting with cuts of 140 points. There's Shanghai down around 0.2%. Straits Times is down around 0.1%. And as a result of all of this, the SGX Nifty is indicating that the start for our own markets could be well in the red. It's an 82-point downtick that the SGX Nifty is indicating right now. Remember, we did see a sharp improvement in basically a rally in our markets yesterday. So let's see which way things go today. For now, it looks like we'll start in the red for now. In the U.S. markets, Wall Street ended Wednesday's trading session lower, with the Dow Jones sliding over 600 points, the S&P 500 down over 1.5%, and the Nasdaq Composite closing with a near 140-point cut. CNBC's Bertha Coombs gets us a wrap of all the action on Wall Street.
Wall Street's New Year rally appears to be losing a bit of steam as weak retail sales number apparently prompted some investors to lock in profits, selling stocks that have moved higher since the start of the year. The Dow losing more than 600 points, almost 2%. The S&P closed down more than 1.5%, while the Nasdaq finished with a loss of about 1.25%. Another big tech giant cutting jobs. Microsoft says it has already started notifying some 10,000 employees that it is laying off. That's almost 5% of its workers. And today, Amazon is starting its previously announced elimination of 18,000 jobs. CNBC estimates that tech companies have now laid off more than 60,000 employees within the last year. And we're also reporting that troubled retailer Bed Bath & Beyond is trying to do everything it can to stay in business. They're trying to either find a buyer that will keep at least some of the chain stores open, or a lender that will finance continued operations if it files for bankruptcy protection in the coming weeks. That's today's U.S. action. Now back over to you in Mumbai.
All right, that's the global market action. Of course, it'll have an impact on the way we see market moves in our own markets today. So let's get in our research team to tell you just that. The Power Prep segment this is. We have Vivek, Ekta and Nigel with us to tell us the trade setup, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. Clear divergence in the kind of close that the Indian markets saw and the kind of handover that we are getting in from global markets. As you mentioned at the start of the show, the US markets have given very weak close, and this is something that could weigh in, at least as far as the opening sentiment is concerned. Now, we also talked about crude oil prices. Crude oil prices cooled off yesterday after the kind of sharp rally that we saw in the week gone by. So Brent futures closing closer to the $85 a barrel mark. Asian markets today are indicating a bit of a weak start. SGX Nifty 2, as you indicated, is showing a gap down open for our own markets. What happened yesterday? Indian markets closed at a 2-week high, and in fact it was the HDFC Twins as well as the metal pack that actually led the gains and led the surge as far as our own markets were concerned. However, you could expect some fizzling out of the rally as far as the metal pack is concerned in opening out of trade on the back of weak handover and also some weak results coming in globally from metal majors as well. Some key results to keep an eye out for. So Indian markets expect quite a bit of volatility on the back of so much news flow.
Okay, all right. So that is about the market setup today, but a lot of stocks will be in focus as well. Ekta is joining us with that list. Ekta?
Hi, morning. Well, I'll start with the big result reaction, which we'll be looking out for. IndusInd Bank, 9th quarter of a year-on-year and Q-on-Q growth in operating profits. Net interest margins, which are at a 10-quarter high, return on assets at a 13-quarter high, return on equity at a 12-quarter high. NII growth has been the best in 11 quarters year-on-year, as well as it's up around 18.5%. Gross NPA is the lowest that we've seen in 8 quarters. So that is actually very positive in terms of parameters for IndusInd Bank. Adani Enterprises, the FPO price is set at over 3,100 odd rupees. Vedanta, they've been declared as a successful bidder for Meenakshi Energy under the corporate insolvency resolution process. Wipro has opened an AWS launchpad in Canada. SBI has raised over 9,700 odd crores in a second infra bond issuance. Kotak, there will be a board meeting to raise funds via NCD. Remember, their numbers also come out on Saturday. Aurobindo, their Unit 1 and Unit 3 have been inspected by the US FDA, issued 2 observations. Dr. Reddy's has cut the price of a cardiac drug in India, so that stock would be in focus. Wellspun Enterprises, there is a voluntary liquidation of an arm which is taking place. Mahindra Life, interesting news there. They won the first society redevelopment project in Mumbai. Potential revenue is 500 crores. Ergo Capital crossed an AUM of around 5,000 odd crores. Lot of other result reactions beside IndusInd, Rallied, Persistent System, Oracle Finance, Shimaru, Goa Carbon. Lot of results today. HUL, Asian Paints, PVR, Havells. And other results include Hindustan Zinc, L&T Tech, Happiest Minds, Emphasis, EU Small Finance Bank, Canfin Homes, Anand Raj. So it's going to be a busy day in terms of stocks.
Oh, definitely. That's a long list. Ekta, thank you so much for bringing up to speed with all the stocks that will be in news today. Finally, let me go across to Nigel, joining in with all the cues from the F&O space this morning. Hey, Nigel, good morning.
Well, morning, Sonali. Yesterday, we had a good session. It was predominantly because of short covering. The indices ended high, and you had big shorts that did cover up in yesterday's trade. And that's precisely what the FIs did as well. They covered close to 10,000 short contracts, and they added 10,000 long contracts. Now, in fact, they're more net long on the index rather than being net short. Remember, the short positioning was at around 64%. It's come down to around 49%. The bigger positive, though, for me was yesterday we saw massive put writing. More than 1 lakh shares got added on the put side, and there was clearly writing being seen out there. They bought more calls than puts as well. What were they writing yesterday? 18,000, 18,100, 18,050. All 3 of them were very, very active in trade yesterday. And the 18,000 and the 18,050 put, well, they were active. That's telling you that the 18,000 to 18,030 level is a crucial support zone. And that's precisely where the 20 DMA comes in at. So just keep an eye out on that mark. For the Nifty, every time it goes to around 41,800 odd, we see a bit of a bounce. The hope is gradually it makes its way towards that 20 DMA. Yesterday, it ended close to around 100 points shy of that. SGX, if is suggesting a 100-point downtake, I'll tell you what, that 18,030, 18,000 odd level should hold out. If that holds out, maybe risk reward could favor the bulls, given that today is weekly expiry. And the last few weekly expiries, last few Thursdays, we've seen a big turnaround from the red. Back to you.
Okay, yes, that level will be important to watch. Nigel, thank you so much for joining us with all those updates. And it's time for a break now. When we return, the government is proposing some big changes to the insolvency and bankruptcy code. We'll get you more details on that when we return. Welcome back. Still tuned into Power Breakfast on CNBC-TV18. Let's get you some important voices from the World Economic Forum in Davos. Our managing editor Shireen Bhan spoke to TCS MD and CEO Rajesh Gopinathan. Listen in to what he had to say.
The mood is definitely much more optimistic. In fact, when we came out with our numbers, I had said that our individual conversations with customers were a lot more positive than what the overall macro commentary was, and that we are basing it on that. That confidence has got strengthened with the discussions that we are having here. One-on-one, everybody is positive. I would say incrementally what has changed is that the European side, there also the confidence has increased. But multiple threats that are emerging here. The opening up of China is a big thing, both from a humanitarian perspective, assuming that they're able to manage that whole opening up well, and then the economic perspective that opens up an export market for the European companies. So that's coming out very strongly. It will affect our lives a lot sooner than what probably people thought 6 months ago. So we need to be prepared to accept that and integrate that into what we do and who we are. So if you take it from a TCS perspective, we need to think of it as a tool, and we need to make sure that it is integrated into service delivery, and our service delivery morphs to be able to accept that internally. We have done the same thing when it came to automation, but we need to do this again. So that AI is out of the denial mode now.
Okay, all right. So we'll of course get you more voices coming in and opinion coming in from Davos as well. But for now, let's move on. The government is proposing some big changes to the Insolvency and Bankruptcy Code. The proposed amendments could spell relief for real estate developers with stressed projects. Sapna is joining us now to get us up to speed with the changes proposed. Sapna, what are you picking up?
Well, first of all, what is being suggested is giving a 14-day mandate to the adjudicating authorities in terms of either accepting or rejecting an IBC plea. Basically trying to expedite the whole process. Second, of course, in terms of the real estate projects, some of the units which are under stress, so the amendments propose separating those stressed units which need the IBC proceedings, separating them from the rest of the entity, because the rest of the entity is completely functional. But many a time, suspicions are cast because just one unit has defaulted, so people look at the entire project in askance. Government here is trying to separate the two, and I think this could be a boost for real estate developers facing some kind of a stress in some of the units. Apart from this, of course, trying to expedite the pre-packaged insolvency framework also. What is being suggested is that the voting for the COC, that can be reduced in terms of accepting such applications under this framework from 66% to 51%. And also bringing more CDs under the pre-packaged insolvency framework. Of course, these CDs are going to be prescribed, and I'm sure the government will come out with more rules and notifications once at least these basic amendments go through. Apart from this, it is also being suggested that the corporate debtor will not have the power to appoint the insolvency professional. This will now be done if the amendments are accepted by the IBBI, which is actually the regulator for IBC. Also, the pool of assets of a corporate debtor's guarantor, that should also be included under IBC. Apart from this, the government is also trying to strengthen some of its own powers. For example, it is being proposed that they should have the right to appoint an administrator under IBC. The work will work as per the code, but the COC will not have the power to remove or replace such a government appointed administrator, and all the work will be handled by the administrator. Last but not the least, the government is also trying to suggest that some powers should be given under the code to exempt a certain class of companies from the IBC. Maybe a separate kind of a window should be thought about them. No details as such, but maybe something will follow through in rules and notifications. All in all, the public comments to these important amendments are invited by February 7.
Okay, take that point, Sapna. We'll keep coming back to you for more updates on this one. Thanks a lot for joining us. So with that, we'll slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. You're still tuned into Power Breakfast. It's time to talk all about commodities now. Manisha Gupta is joining us with all the update from the commodity space this morning. Hey, Manisha.
Hi, Sonal. Morning. This is the US dollar index gains, which are the common thread across commodities, and is the reason that you have seen this profit-taking come into the markets also. The crude oil prices, after hitting $82 of a high for the US crude and nearly $88 of a high for the Brent prices, have come down quite sharply. The reason that you saw the prices gain was because after OPEC, IEA also said that the global consumption will hit record daily average in 2023. That is where the positive news came in from. But after that, there was a surprise buildup in the U.S. inventories by nearly 7.6 million barrels. And then you've seen the retail sales in U.S. decline. The U.S. industrial production also fell for a second straight month. There was high inflation reading from UK and Eurozone as well. And then the markets are getting jittery as various Fed officials are talking about higher interest rates for longer. That weighed on not just on the crude oil prices, but you did see the gold prices come off as well. Yesterday's high was $1,920 per ounce. We're just about holding $1,900 right now. So a $20 has been shaved off in last 12 or 13 hours as well. And the dollar index has gained to 102 plus kind of levels. So whether it's about statements from US Fed, the strength in US dollar, the strength in US Treasuries, all of that seems to be impacting many of these commodities.
Okay, all right. Manisha, thank you so much for telling us what's happening in the commodity markets driven by the swings that we are seeing in the dollar index as well. With that, we'll wrap on this edition of Power Breakfast. But as we do that, here is more corporate commentary coming in from Davos. Amit Kalyani, Deputy MD of Bharat Forge, says CV demand in Europe is very strong. Tell Shireen Bhan that they are optimistic on the defense business, which will be at an inflection point by the end of 2023 or in 2024. Listen in.
Right now, the North American market demand is very strong. In fact, even in Europe, the commercial vehicle sector demand is extremely strong, driven by change in transport logistics modalities. Shipping and logistics have changed from more sea to more land within Europe because especially smaller lots of shipping taking place. So there is a tremendous demand for trucking, and in the US there is a replacement demand that's coming up. Plus the US is now going into a infrastructure build cycle, so that's going to promote growth. So what we're hearing is very strong news. On the passenger car side, the demand outstrips supply. So this year, that is the year ending 23-24, will be our inflection year. This is when we will see significant growth in our defense business, and year on year, this year, next year, year after next, will continue to grow. And I think the Indian government has taken a very strong and right view in encouraging local production and mandating local manufacturing for many sectors, which there is no reason why we shouldn't be making in India. Industrial side of our business is also growing very nicely. Aerospace is growing nicely. That is again a business that's going to hit an inflection point next year. So I think all the guns are blazing. We have now gotten into green steel. Our steel plant in Pune has been converted to make green steel. By next year, we'll have a capacity there of 300,000 tons of SBQ and high-end green steel. And we're already getting customers and significant demand for this. So I think things are looking good in India.